Let's take a look at one of the most popular AI stocks. The ticker is AI. It's for C3. And you can see here back in 2020, they actually IPO'd. They had this uptrend. They eventually broke down below. And ever since then, it's been in this really ugly downtrend until, the most of retail, the majority of people in the US started figuring out what AI was, ChatGPT, etc. And you've had this really huge uptick in volume. Now you can see here back in August of 2022, there was this gap that was formed on earnings. And once we actually came back up, we retested this level, we broke into the gap, filled the gap, and then we had this gap and go above that level where we pushed really high to the upside at around $30 a share. This was when everyone was using ChatGPT, Bard, etc. It's just all over the news. People want to buy AI stocks. They think they can make money. They type in AI on their computer and they buy the stock. Now, we did actually have it break back down out of this channel in April of 2023. We came back down, retested that gap. It held as support, pushed back up for a retest on this channel. And once we broke above that, it was really strong, bullish confirmation that we were going to have a move to the upside. We actually broke above the channel, came back down, retested it, and then pushed higher once more. Now, this was June OPEX, and if you don't know, during OPEX months, especially on quarters, there's often a time where you'll have a switch in trend, and that's what happened in the middle of June. So far, we've been trending lower, and this might continue all the way potentially even into September, the next quarter, quad witching month. And so we did have another really strong bearish candle to the downside, down 10% today after the investor day. So I do think that AI is in a good position to play puts to the downside. I do think that at some point we're going to come back down, retest that channel right around $26 a share. And so this would be the longer term target for some puts. Obviously, it's hard to chase it after a negative 9% day. But if the overall market continues to show weakness, I do think AI is going to trend lower. Now, just some quick details here. AI is a $25.70 analyst rating. So it is above that current range for the next year. It only has 266 million in sales and a price to sales ratio of 14.5. Not much debt, but not much cash either, and negative 200 million in free cash flow. So this is a newer company. It burns cash every single quarter. And I do think that AI, just like EVs, electric vehicles of a few years ago, we are going to be in the same type of bubble. We are going to have another strong move to the downside. I think a lot of these stocks, although they have been rallying in the recent months, I don't think they're going to survive or do all that well in the next 6 to 12 months, when it's more than likely that we'll head into a recession. Hope you learned something from this video. Make sure you check the description below if you want to join our community of other stock traders. And of course, we do have on our website a free day trading starter pack if you want to check that out. See you in the next one. Peace.